Well, Daniel, let's look at the world of toys. I'm sure you played with a lot of them when you were a kid. Now, toys for kids is changing as online retail giant Amazon is breathing down on the toy giant's line, Toys R Us. What is Amazon looking to secure, really?
Well, I think, when you talk about Toys R Us, that brings so much memories. I remember when I was a little kid and, asking my parents, can we please go to Toys R Us, when it was about Christmas or, birthday presents. So, but the entire industry, this entire game industry, mostly for kids, has been changing so much during the last years. Those traditional toys, such Lego, for example, they're not anymore as popular. Kids today, they want to play with an iPad or with a Kindle. And of course, those electronic items you don't get in a store like Toys R Us. And it also seems that the company really had, problems in the past to make their online business as attractive, for example, like Amazon was doing. So that's why we are seeing this problem right now. We are hearing that Toys R Us is filing right now a protection of creditors, which will allow them, to arrange the debt that they are having, and also, at least for the moment, to continue, their business to be operating. But yeah, I guess it's a story that's going to make lots of, people in my age and probably even your age, very sad today.
Well, I guess Toys R Us may just be another victim of Amazon. Well, Daniel, I may just have to let you go at this time, but don't worry, I'm sticking with you for the rest of the week. We move on now to the U.S., where the stock index futures pointed to a higher open as traders await a Federal Reserve meeting for further clues on monetary policy. On the data front, Tuesday will see housing starts, import and export prices, and current account data released at around 8:30 a.m. Eastern Time. The U.S. Central Bank is poised to begin a two-day meeting. The Fed could announce plans to begin unwinding its $4.2 trillion portfolio of treasuries and mortgage-backed securities. On the earnings front, AutoZone is scheduled to report before the bell. Adobe Systems, FedEx, and Bed Bath & Beyond are among the major companies due to report about after the market close. The future numbers looking up there, the Dow Jones Industrial Average up 0.08%, S&P 500 0.07% up, and Nasdaq 0.08% up. In Asia, indices closed lower today ahead of the U.S. Federal Reserve September meeting as investors awaited clues from the central bank on future monetary policy. Japan's market were an outlier, however, soaring after reopening after a public holiday. The Nikkei 225 surged 1.96% as markets played catch-up following the long weekend. The Australian ASX 200 reversed gains made earlier in the session to close down 0.12%. South Korea's Kospi index shared 0.09%. Greater China markets edged down. The Hang Seng index slid 0.11%, and mainland markets paired early gains. The Shanghai Composite lost 0.18%, and the Shenzhen Composite shared 0.35%. To all the markets news, Zambia plans to invite bidders for a fourth mobile phone voice service provider following approval of a new licensing regime. Zambia approved a law in June allowing more mobile phone voice service providers to boost competition. Transport and Communications Minister Brian Mushimba said in a statement that communications regulator would select a fourth service provider in the next 6 to 12 months. Zambia passed a law in 2009 restricting the number of mobile phone voice operators to just 3 to help existing companies expand. And to commodities matters now in South Africa. The mining company Zambia Stillwater will sell bonds worth $450 million convertible into stock to refinance a loan used to partly fund an acquisition. Zambia set the conversion price in the range of 30 and 35% above volume-weighted average share price during Tuesday's session. Shares in Zambia, which bought sole U.S. platinum producer Stillwater last year in a $2.2 billion deal, fell 9% to 12.94 rand, reflective of the dilutive impact of the bonds. The 2023 bonds are expected to carry a coupon of between 1.625% and 2.37% and are payable twice a year. Zambia has been rated Ba2 with a stable outlook by Moody's. Meanwhile, Petro Diamonds shares fell 4% today after the miner said it had experienced labor disruption overnight at its Finch mine and Kimberley copper mining JV operations in South Africa. Members of South Africa's National Union of Mine Workers are on strike over pay. The London-listed miner had warned on Monday that there could be labor unrest as it finalizes a new wage agreement for its operations in South Africa, sending its shares down 7% on the day. It also said on Monday that it had resumed operations at its Williamson mine in Tanzania after a 4-day stoppage, adding that its full-year production target remains unchanged. Petro Diamonds had halted operations at the mine last week after the Tanzanian government seized the consignment of diamonds and questioned Petro personnel as part of a crackdown on the mining sector. And Gem Diamonds said today it had recovered a high-quality 115-carat diamond from the Letseng mine in Lesotho. The company, which has diamond mining operations in Lesotho and Botswana, said the find follows the recovery of 5 other diamonds of over 100 carats so far in 2017 from Letseng. Gem Diamonds owns 70% of the Letseng diamond mine, which is located in the Maluti Mountains of Lesotho and is renowned for its recovery of large, high-quality, exceptional Type 2 diamonds. The government of Lesotho owns the remaining stake. Weaker demand from China and the United States has hurt diamond prices, while India's surprise move to abolish high-value banknotes in November also dented demand for diamonds in the Asian country. Gem Diamonds reported a 14% drop in half-year revenue in August, hurt by lower production and a decline in average diamond prices, and said it received an acquisition offer for its mine in Botswana. After the break, we'll look at some of the issues in the world of commodities. Do stay with us.